There was one thing that changed my trading. The thing that turned me from a consistently losing trader into a consistently profitable trader. Now, I gotta warn you, once you hear this, you're gonna transform from that wimpy Charmander self into a beefy Blastoise, and you're gonna have to rip your opponents limb from limb, fly them back to Pallet Town, and then sell their organs on the black market to Team Rocket. Be careful. So damn ridiculous Pokemon references. What's up, guys? My name's Hunter. This is Hunter FX, and if you didn't catch that reference, that's fine. I was actually going to say something much worse, but it would totally get my account shut down. So we'll stick with that. That sounds pretty good. Now, the fact is that was totally clickbait. There's not one thing that's going to completely change your trading strategy that I could tell you right now, and then you're going to be able to evolve into a Charizard, destroying the markets. But there was one major thing that stands out in my mind that was the leading force into me becoming a consistently profitable trader, and I'm going to reveal that to you. Now, really, this isn't some sort of secret that all the top traders know. It's not some sort of strategy I'm going to give you that you can actually implement into your trading itself, and it's not particularly anything mindset related. It is something that you have heard before, and every time I know I had heard it, I said, I don't need to do that. I can just remember everything, right? And you're probably thinking along the similar lines. And the thing is that all top traders do this. And once I heard that, I started implementing it. I don't know if it's true. That's what my friend said to me. But all top traders do this, at least in some form or another. Now, once I started implementing this, I instantly pretty much started seeing returns on my investment, in a sense. Not really an investment, but I was able to see things I was doing wrong within the next week or two, and then we slowly started accumulating better and better data for what I was doing wrong and what I was doing right. And therefore, I was able to change from being just a retail trader that was just throwing things on randomly, thinking that they were going to work, right? Because this is what I've been taught, this is what the other gurus say, all this trash, right? And we're just implementing them because we think they're right. We think that they're going to win. And then before actually testing them for ourselves, we don't actually know this. Quickly, before we jump into it, this is a Friday video. That means if you comment something in the section below regarding this video, not something just like nice or cool or whatever, comment something meaningful that I can actually comment back to on Sunday. I'm going to pick a winner, and I'm going to give them $25 on the Sunday video at some point in that video. And you do have to make sure that you are subscribed, and you do have to like this video too. So get on with it. What am I talking about? I am talking about logging your trades. And this could be many things for you. You could be taking screenshots. For me, it's mostly just inputting data into an Excel sheet and then finding the returns. Now, there's a couple reasons why you're gonna log your trades that's really beneficial that might not seem so apparent at first. And the first is that you're gonna actually be able to look back on a non-biased case and know that if your trades are making you money in that specific strategy. So for example, you're going to enter in 25 trades, and then you're going to look back and you're going to see that the exact win rate that you're getting and the exact expected return for that strategy. And then obviously if it's a negative strategy, then you're going to cut off that strategy. You're not going to use it anymore. And it's very important that each data point is following the exact same rules, the exact same restrictions for the trade, so everything has to line up perfectly so that you can have accurate data for that method. The thing that actually popped out to me at first, like I said, it took me only a week to figure this out in logging my trades, was that my winners were actually much smaller than my losers. So what does this mean to me? Well, either I was taking really low R trades, so my risk was bigger than my reward, or I was cutting my profits too early or something like this. So what I figured it was I was taking profits along the way because I was fearful that it wouldn't reach my final destination, right? And then when it did hit the final take profit, I would have thought I had hit 2-3 R or whatever, but in reality, after taking all those profits, I was really only getting like 0.75 R when my losers were losing 1 full R, right? So unless I'm winning, 60-70% of the time, then I'm actually going to be coming around on a negative balance after a long period of time. So that was the first thing that really clicked for me. So there's plenty of other options that you're going to see appear in your trading. This was just an example. That was the first thing that popped into my head, and there's been plenty of other things I've found, and I've refined different strategies is another thing that's really going to help you, so you can see what variations of the strategy are working better, things like this, right? So once you do find a profitable strategy is what I'm talking about. And it's really important that you know these data points so that you can know the expected return, the expected win rate, and then you're going to be able to keep that winning attitude. And even if you go on a losing streak like I have recently, I still know that in the long run I'm still going to come out to those same metrics. So the real importance with data collection is preserving your feelings, in a sense, from a non-biased perspective. Now, what the hell do I mean by that? Well, it's very common that humans, they don't want to feel pain, right? So naturally we build up these defense mechanisms. And I'm going to give you the example of the person that I know, and you probably even do a little bit yourself because everybody does it, is where this person never seems to take responsibility for their own actions, and they blame everything on everybody else. But when they do something wrong, oh no, that wasn't a big deal, or it's somebody else's fault, things like this. This is one example of a natural defense mechanism where we don't want to admit pain to ourselves. We don't want to feel like our life is actually worse than it is. So we create these false realities. Now, with logging your data, you're going to be able to see these real truths of your trading, right? Instead of just blindly saying it's the market's fault, something like this, or the news caused me to lose, something like that, right? You're going to be able to take full responsibility for your actions, and that's what's absolutely crucial in developing any skill. That takes a lot of time. You're going to have to at least take responsibility for everything that goes on, and you can't really blame this or that or whoever, right? Another example I can give you for a defense mechanism that humans have is that we have an inability to see pain from the past, and we really focus on the positives. And you might think that this isn't true, and that we actually fixate on the negatives, but I'm here to basically tell you that this is what I believe that people think like. So the example I can give is a parent and their children. So if you ask a parent about their kid at any given time, they might say, oh, they're being rotten or something like this, right? They're acting like brats or whatever. They're not being good. But after a while, if they're not around their kids, you'll ask them, okay, how do you like your kids? And they'll say that they're absolute angels and they're perfect, right? And this is basically when the human mind is not able to accept how bad it is with that relationship. Or another example might be girlfriend, boyfriend that don't get along, but they feel like they are after the fact that something bad has happened. And it's just a protection mechanism where we want to feel like our lives are better than they are. So how does that relate to trading? In a sense, when you have 5 losers in a row and you have 1 good winner, then we're able to focus on that winner and protect our mind from feeling bad, right? And we know that we've lost in the greater scheme of things, but we can really just focus on that winner, and then we can end up feeling good from that. With this data, we're now able to escape the release of this loving cloud of whatever your emotional response is, right? And we're able to objectively look at what's actually happening. Now, there's a few important things that you need to actually keep in your logbook, and you can really make them your own, but there's a few key things that I'm going to show you here right now, and I'm also going to link my logbook into the Discord. So the link's in the description if you want to join the Discord, but let's jump into that. So I'm going to quickly go over just kind of the logbook that I'm using here, and I'm probably going to blur out a few things just because I don't want to show some actual data, and I am doing some logging for other people, and I don't want to reveal their strategies because these strategies are actually said on screen here. You'll see. So on this first page here, I have, let's make that bigger there, I have some issues that it's just got tally basically, so you know, if you didn't move your stop forward or you moved it too early, rather, things like this. And then you can really just see a simple way. Okay, so these are all things that I'm actually kind of bad with. Is I tend to be impatient. So I exit too soon, I enter too early, I move my stop too early. So things like that, you can really notice right away that, okay, I need to step back and say that next time I just don't want to look at the trade as much, or I need to follow the plan better, something like this, right? So I just kind of have a template here where, you know, you would start out, I do this each quarter, and I start out with a new template, and these are all the different strategies I want to run for that quarter, and then I see what profit or whatever, and this is the current quarter that's running on right there. I'm just not going to click on it just because there's a lot of data in there. And then here's an actual strategy tester template. So basically the way I broke this down was, you write the template name or the strategy name, you enter whatever requirements are going to need to be entered, and then whenever you see that pair for the next 25 trades, you're going to enter the profit basically, and you can enter, you know, different variables or something too. So I'll show you actually one that I'm running right now, and this one's I'm actually going to blur out, I think, some of the data here. But so here's some live tested data that I'm just going through, and you can see after a while, because I'm actually recording this in R, right? So risk reward. So after a while I get 50%, a lot of data points, and this is the expected result, things like this. And then these are my different variables that I'm actually testing to see which variables work better, and then the pairs, obviously, you can see down there. And this data sheet goes on for, I think, like 400 data points or something like that, right? And then you get a really accurate representation of what you're going to get. So what are the key things that you want to implement? Well, first of all, I would say write down the pair. That's pretty obvious. I don't think short and long is very important because I basically never find a difference too much. But the most important thing is the profit. So you need to track to see how much you're actually making. And then aside from that, it's just the other variables that you're going to want. So I like to do different time frames. I like to do, you know, where am I entering after the pattern has been printed, and then different things, you know, is it on a trend or is it consolidating? Anything that you can think of, you can enter on your own and figure it out. So that's all I have to show you guys on that logbook there. If you have any questions, please let me know in the Discord. And if you'd like to see some more, there's plenty of other videos I'm going to link up right after I'm done talking here. But please make sure you hit that subscribe button too, and there's more content coming in the future.
Listen.